How to use news in trading. Markets are influenced by multiple factors. The major ones are economic, financial, and political factors. News can change a market situation in a moment. If the news is positive, currency rates or stock prices usually go up. If the news is negative, they go down. So, which news should a trader follow? The first point of interest is economic releases or economic news. These are publications of various economic reports and statistics, such as gross domestic product, unemployment, inflation or interest rates, retail sales, and other data. Financial news, represented by financial reports from companies, largely affect stock prices. If financial figures are better than the forecast, a company's share price usually goes up. If a company's financial figures are worse than the forecast, its shares decrease in value. A country's health is affected by political events. Elections, revolutions, impeachments, death of political leaders, and other events that may cause political instability, so it's important to follow political news. Some unexpected events, such as terrorist attacks or natural disasters, like earthquakes, tsunamis, or droughts, influence markets too. Keep in mind that the market's reaction to a news release usually lasts from 30 minutes up to 2 hours, but sometimes it can last for 3 to 4 days. You can follow our smart news feed that accumulates news from multiple sources in the market analysis section on the left-hand side panel. In order not to miss the most important releases, scan an economic calendar. How to read economic calendars. On our platform, calendars are located in the Market Analysis section on the left-hand side panel. You can use a Forex calendar, an earnings calendar, and a crypto calendar. Let's study the structure of the Forex calendar. When you open it, you will see a list of economic reports. The country releasing the report is indicated by a flag. Choose a report by clicking its name. In the new tab that opens, you will see the release date and the period it covers. Just below it, you can see 3 values: currently, forecast, and previous. Currently means the actual reading. It appears at the time of the release. If a report has not been released yet, this field is empty. Forecast reflects the average of analyst predictions before the news release. Previous is the value published in the previous release. Each event is accompanied by the volatility index, which may be low, medium, or high. This index shows how much the report can influence the volatility of the asset or assets listed below. By clicking the settings icon above, you can filter releases by volatility impact, country, or category. The general rule for reading the Forex calendar is the following. If the actual reading is better than the forecast, the currency appreciates. If it's worse than the forecast, the currency depreciates. However, such indicators such as unemployment claims and unemployment rate influence the currency in question in a better way if they are lower than the forecast. Now let's take a look at the earnings calendar. The earnings calendar shows the EPS of companies whose stocks are traded on our platform. EPS stands for earnings per share. It's one of the main indicators published by companies when they file financial reports. The calendar shows 3 values of a company's EPS: current, forecast, and previous. If the EPS is better than the estimate, the stock price will move higher. If the EPS meets the estimate, the stock price will most likely not move. If the EPS is lower than the estimate, the stock price will fall. The previous values are usually less important than the forecast. The market reaction will be stronger if the difference between the forecast and the actual earnings is large. The third calendar is called the crypto calendar. It shows the major events in the crypto and blockchain sector. Each event is accompanied by the logo of the cryptocurrency that will be affected. By clicking an event, you will see when it will take place, the volatility importance index, as well as the current price of a digital asset, spread, and change in percentage. How to trade economic news. Economic releases are publications of various economic reports and statistics, such as gross domestic product, unemployment, inflation or interest rates, retail sales, industrial production index, trade balance, and other surveys and data. Of great importance are announcements made by key representatives of major national financial institutions, for example the Federal Reserve or the Department of the Treasury in the USA, or the Bank of England in Great Britain. Let's take an example. On the 13th of June 2018, the US Federal Reserve raised its key interest rates by 25 basis points, from 1.75% to 2%. As a result, the dollar strengthened against the emerging market currencies and hit a 3-week high against the Japanese yen. Following the Fed announcements, a trader could make a profit by buying the US dollar and selling the Japanese yen. How to trade political news. Politics affects a country's economy and as a consequence has a major impact on its currency. The most important political events that can affect the economy are elections, revolutions, impeachments, death of political leaders, etc. In other words, everything that may cause political instability. Let's study an example. On the 23rd of June 2016, the Brexit referendum took place in the UK. As a result, the British vote impacted both Britain's economy and the British pound. The UK's currency dropped 10% against the dollar and reached its 31-year low overnight after the vote. Traders were selling the pound while investing in stronger currencies. Some unexpected events, not necessarily political ones, may influence markets too. These may include terrorist attacks or natural disasters like earthquakes, tsunamis, or droughts. Remember that a market reaction to unexpected, breaking news is usually stronger than to scheduled data releases. How to trade financial news. Financial news is an important factor that influences a market situation. Publicly traded companies are required to publish various financial reports that contain important financial data, such as revenue, net income, earnings per share, cash flows, etc. This information influences a company's stock price a lot. It's important to follow quarterly and annual reports. In general, if the basic figures are better than the forecast, a company's shares increase in value. If the report is below the market expectations, a company's shares decline. Let's take an example. Google's parent, Alphabet, published Q2 results. Its revenue in Q2 grew by 21% compared to the second quarter last year and amounted to $26 billion. The company's financial results beat market expectations. Following the news, the shares of Alphabet rose by 5.3% and reached an all-time high of $1,275. In order not to miss the most important financial figures, scan an earnings calendar.